Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 21st. I need to move that a little bit closer. I need to make that a little bit louder. There we go. How are we today? It's Monday. I have to admit, I feel a little tired. I didn't get my rest over the weekend. But hey, come and look at this stuff that happened on Friday, man. Holy crap. So, I mean, like, it kind of started out kind of bad, but then going into the close, man, this chart doesn't really show it. Going into the close, there was just this absolutely terrible puke. The market just completely cratered going into the close. A lot of options gamma expiring on Friday. And of course, everybody's still talking about the Federal Reserve being more hawkish than expected, but I'm still kind of sitting here like, it's not really a big deal. So, of course, what's going on in the options gets blamed on what's going on in the interest rates, which are kind of interesting. But then something even more interesting happened. Well, actually, it's kind of all come back. But in Japan, man, did you see them buy the 30-year? Look at that. But it is like cratering right now. All of them, actually. I mean, there's a 10-year. Really, we want to look at ZB. ZB just whoosh. Okay, like there was significant flattening on the long end of the curve, which is a bearish sign. I have to say, it's just like 2 days worth of action. It's reverting already. We'll see how far they go. This could be nothing. This could be like a head fake sort of a thing. I don't know. But really, really interesting. And what we're going to be paying attention to the most for sure. Checking out on some of the other commodities. Oil's actually doing well. Gold and silver, look, they tried to bounce a little bit. I mean, come on. They are just not recovering from the FOMC. It's just, look at this. It's just, oh my gosh. Gold and silver. So sad. So sad. And then copper down just a little bit. And again, we should, remember when it was like 90, we're ever going to break down from 90, boom, all the way back up to 92. Okay. So the dollar, very strong. And that's been a key driver behind all of this stuff. So, all this stuff. By the way, we should turn on our strategies here. I guess I'm turning all of them on. I say. So I was like, we're supposed to be running a combine. I was like, oh yeah, I can run some of my robots on that. Be great. And I was kind of just went back and said, okay, let's kind of like game out some of the risk parameters and see what we can get. And I went back and did it on some of my algorithms, and like they were not backtesting very well. It was like the ones that had been doing well were not doing very well. Gabby in particular, which seemed to be doing well at one point. And then I did on the backtest, all of a sudden it was really bad. I'm like, wow, what happened? Was kind of interesting. Okay. When I saw the momentum and everything, I decided to go short. And since they weren't still plowing into it, I needed to get out of it. So took the 2 ticks. We're good. Anyways, so I started going through some of the older ones, and it was like the same thing. It was like there was a bunch of algos that they backtested well, but when I looked at the stats, I was like, I don't know if I really want to trade this. This one is sketchy, right? So here, then I was like, okay, well, let's go and look at it again. Maybe we got lucky or something. No, like they were all terrible. I was like, I'm not sure how confident I can be in running these. Although J2 on the live simulated trading has been doing really well. So this is the issue, is that some of the things that some of the strategies that I've made just don't backtest reliably. So I don't know what I'm going to do about that in the longer term, because that's kind of been where I've been doing most of my work, you know? Do I just have to resort to just always live testing them? I don't know. Hey, Stick, how are you? I could also just trade it discretionarily, but I don't know, man. I guess there's not really any good reason that I can't do it discretionarily. I guess I just had this idea in my mind, like, oh, I'll run a robot. Maybe it'll, do well. It'll be great. I don't know. So I kind of got that on my mind. Oh my gosh, what's going on here with chat? With my chat window in OBS. Ew. Why is it like that? I might need to, do I need a hotfix for that? That's, you see what it's doing? It's like, oh no, it's not rendering correctly. Let's see here. Maybe if I close that window and then open it back up again. Ah, there we go. We fixed it. I'm brilliant. So anyways, there's a couple more interesting things we got to talk about. Bitcoin. Oh, we didn't talk about Bitcoin. Let's start out with Bitcoin. Oh my gosh. I was going to make today's whole video about Bitcoin, and then I totally spaced it. Yeah, that's funny. So we come in here and look at Bitcoin. Okay. I don't think that this action is good. So let's just remember, we were up at 60K, right? And then of course we came back, and there was a little bit of tumbles as it did so. And there was kind of this triangle false breakout, then pushed higher, but they still weren't able to get above the 40K level. Okay. So that's kind of where we're at. And when I go out there on the internet, you got to realize that the breakout was really from 20K and then really accelerated after 30K when a bunch of people bought in after Elon Musk, right? So 35K has kind of been a key level for them to hold. And so it makes sense that you'd see some dip buying there and everything. But just realize that the people buying this, they're not necessarily in a great position, So if we were to break below 30K, I think things could get really ugly, because you still got a lot of people out there that are just way over leveraged. Well, but then there's this other thing, kind of the seasonality to it, right? Bitcoin tends to have moves in the fall. The peaks are almost always between October and December, okay? And then the beginning of the year was kind of bad. And then often there's a little bit of a spring spike, and then it dies down in the summer again, right? So when we saw this big spike at the beginning of this year, it was oh, okay, well, we come back a little bit, and then maybe they go for the high in the fall. That's kind of the cycle experts, I guess you could call them. These guys that they look at how far it went last time, and therefore how far, that's what they're thinking. Okay. Then we come here, and China is banning Bitcoin mining, and a big portion of Bitcoin mining hash rate has gone offline. I think they said it was 90% of China's hash rate. That's a lot. I wonder, are those ASICs all going to flood the market now? Or are they going to move their operations? I can't imagine them just completely ditching those those investments, but who knows? It's not a good thing for the hash rate to, you got to think about Bitcoin as like an economy. Okay. That's really what it is. This is why I say you got to look at transactions and how much money is actually going through in real terms, right? The more money that's going through the network in real terms, the more it's worth, because that basically means that economy is like worth more, right? Well, if the biggest power players in that economy are shutting down, the miners, that's a very bearish thing. So I think that they have a setup where it's very possible that they could dip below 3,000 and things could get really ugly. But they haven't done it as of yet, so it's probably a little bit premature to be calling it like that. But that's kind of what I see in Bitcoin, and it does not look favorable at this moment. So yeah, but I don't know. I got so many thoughts. You know what? I think I'm a little scatterbrained because I just didn't sleep well last night. But it didn't get to bed on a good time. Like we were yapping. Me and my wife were yapping because she came home. She was gone working all weekend. She came home. We're talking, and then it was windy last night. You ever get those like freak summer winds? Let's see here. I went to bed last night on the news that the Nikkei was over 3% down. I see they bought it. Yeah, right? Well, you kind of have to... There's a lot of unknowns here. You know what? Something that really bothers me is that you get a lot of, I would call, financial junk food out there, where it's basically all of these same people. Why do I have an order out there, by the way? It's all these same people following each other, basically. It's like they're seeing the things in the market that are like obvious, and it gets reported on CNBC or whatever, and then all of these so-called gurus and experts come out on TikTok, and then they repeat the same thing back over. So like here, there was a huge gamma expiration on Friday, right? So, and then there was a Federal Reserve meeting. And this week, there's the Russell, okay? We should remember that there's the Russell, okay? The Fed meeting, they changed the dot plots, but probably more importantly, they made some change to the repo facility. So, they're paying them 5 basis points at the repo facility. That's actually like pretty dang good. Okay. That actually increased because that's attractive. The rest of the market is going to have to catch up and we'll see what happens. But that's also something that we should be watching, right? But there's the options expiration. The options expiration, there's so much gamma, and when that gamma comes off, we always see declines. The dealers that had hedged themselves for the options expiration dump the shares that they had bought. Right? Well, so how can we really be looking at the S&P 500 in particular and be saying this is because of the Federal Reserve? You know what I mean? So what Jay Powell said was different from what the dot plot was telling. Well, listen, the dot plot, what members of the Federal Reserve Open Committee think about what interest rates are going to be in 2 years, and if two of them move their dot up a month, is that really saying anything? I don't think so. And Jay Powell doesn't think so. And this is not the first time that Jay Powell has said as such either. Many times he's been like, look, the dot plot's not that big of a deal. Like, we're not using the dot plot the way that the Federal Reserve intended us to use the dot plot, right? They're just to kind of keep tabs on what people are thinking and stuff. But this is not intended to be like us. I don't know, man. It's just, I just don't see how changing it a month, 2 years in the future, like that is... Our ability to predict that far into the future is very, very weak. And so much is going to happen between now and then. I just really have a hard time seeing how you can make this huge read. Okay, like the whole market pivots and we go into a recession because they changed 2 dots. Come on, guys. It's just ridiculous. And you know what I think is happening here, to be honest with you. I mean, listen, maybe it is a big deal. Maybe the Federal Reserve is making a policy mistake and the economy is about to go into a recession, and it's like, and then you can tell me that I'm stupid, okay? But I'm looking at this right now, and what I see is that financial junk food coming in over everything. You got these people, that's the thing that they're talking about. The market made the move, so like, oh, that must be why. And this is the big deal, and then you got all of these influencers and everything. They can only see that, and so they don't know enough about the market to talk about the more nuanced picture to be able to come in and say, well, maybe that move that we saw doesn't mean anything. Okay, let's keep an eye on the 30-year, because that concerns me, right? Them piling into the 30-year the way that they have is a very bearish sign. Okay, that is flattening on the long end. That is the kind of flattening that you see before every recession ever. Okay, and I've only seen this 2 or 3 times where the ZN literally would move down and the ZB would move up at the same time, even if it was for a few ticks and it was short-lived and everything. Like, it's a very, very rare move. They almost always move in tandem. And when it's happened in the past, I think there was one time where it was kind of a spread trade and it moved, but then in the end it didn't end up being a key thing. But then there's been other times where I've seen it into tapers and it happened before pretty big market chaos. So, you know, that one concerns me. But it was a one-day thing around options expiration. Like, we don't know enough, you know. Like, I didn't make a TikTok about it because I was like, well, I don't think we know enough to really make a conclusion on this yet, right? It's not the 2 dots. It's supposed 2023 changes going from 0.75 to 2.5, and what the market interprets as 2024 or 25, and at that, the sentiment is that the Fed will have to do something. I just really don't think that the Federal Reserve's overall outlook has really changed. I really don't. And to that point, on Friday, Fed's Bullard came out and was talking, and he made a couple of comments that really moved the markets. Here again, these were comments that he had made before, right? It's like you get all of these people that they don't follow interest rate policy regularly, right? And so then they come in and the headlines are on interest rate policy, and so they get all excited, but they don't remember that, or they weren't paying attention when that happened. You know, that's kind of what I think is happening. Because it's just like, we have some key data points coming up in the next months. You know, like the next 3 or 4 months of CPI numbers are going to be really telling about what is going on in this economy. Q2 GDP, that's going to be a really telling number, right? And you're telling me that, like, that's not going to affect the way that the Federal Reserve is looking at things? Like, I don't know, guys. I don't know. But I just want my shorts to print well. I don't know. You didn't make money off of that? You were short and you didn't make money off of that? Then I think you got a bad entry, dude. Sorry. Like that's about as... I have to say that puke into the close on Friday, dude, if I am like swinging short and I see a move like that, I take my profits. That's just me. Like, you are not going to get a much better bearish move like that unless it is like truly turning into like a recessionary territory. or like a real market panic is about to ensue. And from the things that we're seeing this morning as the U.S. market gets going so far, I just don't see that happening. So, I guess today kind of ends up being an important day. If they come out on the S&P 500 and they buy the dip, then I think people are going to look at this market very differently at the end of today than they did the beginning of the day, right? Whereas conversely, if we go back down to lows, it's going to be people are going to start getting scared. I suspect not, though, to be honest with you. It's pretty rare for there to be like, you really have to have something external going on to make the Russell rebalance week be bearish. You know what I mean? Yeah, it's a nice print for you, but I've been playing this whole time. Yeah. All right. Sorry. You get a lot of things. I saw this is going to seem like a really crazy segue, but there was this guy who was arguing about, like, I think that we've had this argument on this channel before too. He was making the argument that there is no free will, basically. He was saying that consciousness is deterministic and that you don't really actually have free will. That's what he was saying. And I was like, well, okay. Like, if you took the sum of everything that there is to know about consciousness, what percentage of those things do you think we know right now? And I would say it's probably less than 1%, right? There's going to be so much more to learn about this thing. We know so little. So, like, do we really have enough information to be saying that there's no free will? I'm going to say we don't, right? Vlad says he obviously doesn't know programming. Yeah, I didn't think of it that way. Well, there's this whole thing about, like, that it's deterministic. It's really not. Like, we can't say that it's deterministic. From what we know right now, it's not deterministic from the information that we have. Okay? I cannot plug in all of these variables and make 100% accurate calculation about what you're going to do. In fact, I think that you would find there are some situations where you can very easily predict what people are going to do, and there are some situations where it is extremely difficult to predict what people are going to do. And it comes back to this whole thing that's like, if I tell you, think of something random, and then you think of something that's random, was that predetermined? Was it that from the very beginning, your unique brain chemistry and your life experience led you to this moment where I told you to think of something random, and that deterministic system spat out the answer, this random thing that you were predestined to randomly come up with from the beginning of time? And you say yes, but how do you know that? How do you know that? Because we don't know where that comes from. Like, you can go into the brain and you can trace the impulse, and this impulse will come out from somewhere, and we don't know where it's coming from. It just, like, it comes out of nowhere. Some people think maybe it's a quantum phenomenon, but, like, we just don't know. Like, we just don't have enough information to say that. I get why some people say that they think it's deterministic, but we don't know enough. We're going to have to look that up. I've never heard of that before. But anyways, coming back to the markets, like, there's just a lot of things that we don't know right now. People are trying to make, like, strong pronunciations about the way things are when there's still these huge big question marks out there, right? Like, after they changed the repo facility, there was more money got parked, right? All of these people The same people that were saying there's a real problem here. And a lot of people saying, oh, they're going to raise the rates, but it's like no matter what you do, you lose. You know what? You're right. Because you're going to do the thing, and then a group of people that were on the other side of that are going to come out and point out all the problems. Right. So it's no matter what you do, the narrative always comes out. People saying that you failed. Right. That there's a lot of situations like that. But like, you got to give those things time. Right. Like maybe it is bad. I don't know. If it's still bad, let's let them do the Russell rebalance. The Russell rebalance is a big deal, guys. It's a big deal. Okay. After that, week after that, we're still seeing a lot of money parked. Then we're going to have to start thinking a little bit harder about what's going to happen over there. Just because consciousness is delayed in time doesn't mean that it's deterministic. We can say that we don't know, but it's just a calculation problem. No, it's much more than that. Like, so think of it the way that like a data scientist goes and tries to create a model for a system, right? So when we come over into the S&P 500 and we come and we say, okay, I have a model for this system. Okay, my model is that this is a Gaussian random distribution. Okay, and then you compare the results of your model to what you actually get in the market, and that determines how effective your model is, right? Because you can't, like, models are not necessarily right or wrong. There's levels of effectiveness. Okay. Remember that. That's another one that people will screw with you. Okay. Models are not right or wrong. They're effective and ineffective, right? Because it's never going to be a perfect representation of reality. It's a model, right? Model is to approximate reality as best we can. Okay, so if we come in and we do a Gaussian distribution and we compare it to the reality, what are we going to find? That is not a very effective model, right? Okay, so what have we done? We can go in and we can use our current understanding of the brain and make a model of the brain, and what do we find? It's not a very good model. There are parts of the model that we don't know what they are, and how are you going to find them, right? Well, what is the process that's in there? You have no clue. And to say that all of those processes are deterministic, that there are no mechanisms that are not deterministic in the universe is essentially what is the assertion, really, right? So that everything in the universe is deterministic. Like, where do you get that from? What is the piece of information? Like, what is the logic that proves that that's the case? Because there's a lot of things that go on in the universe that I say you're gonna have a really hard time explaining with a simple thing. Bitcoin to the moon, says Anthony. Oh, I don't know, man. You probably missed my earlier thing, but I'm a little concerned for Bitcoin right now. Like, miners leaving is not a good thing. Okay, at least in the short term, it's a very, very negative thing. Okay, all of the supply coming offline, the Bitcoin is correctly going down, and there's a lot of positioning trouble ahead for them, right? If they break that 30K, there could be some real chaos, right? If they break 20K, holy crap, look out, right? There are so many really long from 40 to 60K. So many people. And these people, I really don't think they're in it for the long run. So what's going to happen when they get to that point? You know what I mean? There's a lot of money that could puke here. So, but thank you for the donation, Anthony. We'll see where it goes. Man, like this is the thing is like when you talk about like is something deterministic, it's like the problem is that we can't really wrap our heads around what kind of a process would happen that's not. Like if free will actually exists, then how does that work, right? Because in our minds or in the moral mind and the religious mind that thinks about free will as a thing, it's your decision that you make. But like, where does that come from? Like, if it's not deterministic, then it's something that we just don't understand at all. You will buy the dip. Well, if we go down that far, then I think that there is a point at which I would buy the dip, but it's still quite a bit lower. So when we come back and I look at like my own valuation, if we were to have a flush after 30K, then we would be getting to levels at which it makes sense to buy it. Now, the issue is that if we look back at the 2017 bull run, right, we got like a dead cat bounce sort of a thing. Like the indicator touched that level and then bounced, and then it didn't make a new all-time high, and then it fell quite a bit further, right? So if we get a bounce like that, you kind of still have issues, right? And I'll add that this time around, I think that there's a little bit more structural problems, or rather, why did Bitcoin crash in 2017? Was it because people realized that the technology had problems? Was it because of some macroeconomic event that ended No. The reason that it fell was because they were all long for the CME Bitcoin futures to go live. They took their profits, and at that point, it started a chain reaction of overly leveraged positions, taking themselves out, right? And then it just collapsed, right? So 2017 didn't really happen from like a real macro. I mean, I'm sure that there was headlines at the time, but I don't remember what they were. They clearly they didn't matter. You know what I mean? Well, this time around, there are real problems, right? The big one right now is that they're banning Bitcoin in China. That's a big deal because a lot of Bitcoin's activity happened because of stuff in China. Right? A lot of the decline was because of what Elon Musk said about its energy usage. And hey, guess what? You can go and you can make a minor consortium where you use renewable energy, but the reality is that Bitcoin uses more energy than is necessary to do the thing that it is doing. And it is therefore an inefficient use of electricity. And that will always be an issue, regardless of what the source is, because that is still energy that could have been used for something more productive. Bitcoin could function on a teeny fraction of the electricity. How do we know that? Because there are cryptocurrencies out there that do it, right? And there's a whole slew of issues related to that I think that were kind of scaring people. So I would say that this was a real issue. And it kind of begs the question, if those were the reasons that people sold in the first place, how do you recover without fixing those issues? Like if it was a regular stock, the stock would continue to go down until those issues were fixed. Just saying. And on top of all of that, the tether thing is still not resolved. And I have to say, if you go back and if you go out and you look at the guys that run tether, like Paolo and them, and you see what they're saying on Twitter, that they, of course they're still defiant as always, but man, for people that are running, one of the largest commercial paper players in the world, saying the shit that they say on Twitter is a little like, that is not the words of people that are, totally clean. Let's put it that way. Well, I would be a little concerned by their behavior. And I have to wonder if there won't be what do they call it? Another needle drop or whatever they say. For tether. But we'll see. I mean, come on. We thought the people that were really concerned about tether, well, of which I am one of them, but I couldn't say that I'm like the influencer that's kind of like saying and has all the information. I'm just kind of following people. They kind of all thought that things would really fall apart in May, and they're still kind of waiting. Okay. But I'd be concerned about that because, like, where did all that commercial paper come from? Maybe it came from the exchanges. They won't let us know. Will the Attorney General no? Will it? And if it doesn't know, will it be satisfied with not knowing? I'm going to say no, because it seems to me like they don't actually have this money backed. We had a few little ticks down there in the 10-year. But it was like another one of those, like, okay, good little dip. And it was flat for a while, though, at 07 half. So it was a pretty good decline. Where did I catch it from? I caught it from, yeah. I guess I could have held that one, but I'm not really looking to swing them. If China's closing down mining farms, there'll be a more opportunity. Well, there's a lot of steps involved in that one, right? Right, Anthony? Okay, so can they? Like, these people live in China. Their money is in China. Like, do they actually have the ability to move their Bitcoins to another place and start it up? And then if they do start it up again, like, where? You're not going to get as cheap of power as they were getting in China, probably. Is the place that they go to going to like that they're doing that? I was reading, because the reason I bring this up is because I was seeing that argument in the Bitcoin subreddits, right? And some people were like, yep, they're just all going to move to Texas and then everything will be fine. And I'm like, okay, do you really think with all of the problems that they've been having on the Texas power grid lately that they're going to appreciate tons of Bitcoin mining moving over there right now? There's an issue with that one, right? Do you guys prefer? I would not recommend trading Forex. I'm straight up anti-Forex. If you want to trade currencies, use the FX futures on the CME. But what you get at your typical Forex brokerage is, how do I put this accurately? Like, in my mind, it's a scam, but using the word scam would be, not accurate. It's just not a fair game. It's just not a fair game. They're taking the spread away from you. Like, you realize, how do the banks make money trading, right? Does Goldman Sachs make money from having a really, really good idea about where the S&P 500 is going to go and being able to predict every little turn and everything? No. In fact, if you go and you talk to those traders, they're gonna, and you ask them, like, do these kinds of signals exist and things like that? And they're gonna be like, we don't know. They know that their hedge fund buddies, their clients, they know that their hedge fund clients make calls sometimes that, are awfully prescient, and they have no clue how they do it, right? How do they make money? They make money off of the spread. So if you come in and you have a product that is literally premised on eliminating the spread from you, how can you think that that's fair? Why would you want to trade that? Like, that's not a fair game, right? I keep looking at this like, I want to go short, but I can't. I don't know if that's a spot that I can actually take it. Why? Is it because it's decentralized? No. But I think that a fair market is a market where everybody has to go in and put their orders in the same spot. So I'll add that stocks are not as fair as they should be. Like these dark pools, for instance. Man, I mean, listen, dark pools aren't quite as nefarious as everybody says that they are. Because, so I saw this thing the other day. They're like, well, this is how they manipulate it, is they'll go and they'll buy a bunch of shares in the dark pool, and then they'll come back out and they'll sell it on the open market, and that's how they manipulate the price lower. And I'm like, yeah, but you realize that somebody had to sell them the shares in the dark pool, right? Right. And then it gets reported the next day. So it's like, it's a way for them to improve their execution, to make their execution efficient, but the long-term impact that it has on the market it's a wash. But I still say that everybody should be like this whole system that we have where you go through brokers and it's really like 4 brokers that are really putting all of the orders in on the market and all of that sort of stuff is like, no, that shouldn't be the way. It should be like it is in futures. And by the way, there's some problems in futures too. How come in futures they don't give you the timestamps? Huh? In CQG, when I see an order, and like when you're in NinjaTrader and you get the time on an order, that time is the time that your machine received it, not when it happened on the exchange. Why don't they give us that timestamp of when it happened on the exchange? Because then we would be able to reconstruct a more accurate representation of what actually happened on the exchange, and they don't want that. Because it would be an advantage. It would be an advantage that we would have over the people trying to execute large orders, so they don't want it. Right? But it's a heck of a lot more fair than what they have in stocks, and that's a heck of a lot more fair than what they have in Forex. But there's reasons to do stocks because, hey, you can own stocks for long periods of time and they tend to go up, right? And for day trading stocks, I mean, I don't know. There's a lot of people that seem to have been making money day trading stocks, but we know from the statistics that in the long run, that tends to be a pretty difficult game too. So is there something about stocks that makes them inherently easier or better to trade than futures? I'm not so sure about that. Maybe. Okay. Futures. Hey, I'm not going to say that you can make money with futures. It's super difficult. I'm only going to say it's more fair. It's more fair, right? When you lose, you just blame yourself, right? You can't blame the not having the spread like you can at Forex. Market makers have exclusive privilege to create shares, part of why. Well, Citadel tried to become a bank and decided the market maker life was less regulated. Well, yeah, there are definitely so at Goldman Sachs. Goldman Sachs did not want to be a bank holding company, right? The regulators basically forced them to do it. I mean, I guess it was a good thing for the company in the long run, but that was not their game. And I mean, they made money on market making, but their game wasn't really market making per se either. Their game was the thing that they were good at was executing orders for clients. You want to execute a large order, they do it more efficiently. They move the market less if you went through Goldman Sachs. I don't know. This thing, you're kind of getting into the whole, naked shorting and that sort of a thing. This is kind of a different issue. Citadel is doing things in the equity markets that I really don't think should be allowed. But here again, like, a lot of these problems wouldn't exist if everybody was forced to use the same kind of system that they have in futures. Goldman Sachs makes its money selling its clients up the creek on mortgage-backed securities. Well, no, that's not where the majority of their revenue comes from. But they did have clients that wanted a lot of mortgage-backed securities. I don't know what to tell you. People wanted them at the time. What are you going to do? This is another thing that we always see in the market. Like, when I worked, remember, I'm maybe a little bit biased because I worked for them for a while, right? But when I worked for them, that was the thing that I saw in the in the like the discussion that drove me crazy the most was everybody saying, "Oh, Goldman sold them this thing that they knew was bad and yada yada yada." Well, okay. There's a couple of problems with that. Okay, number one, Goldman Sachs is a big company, and what one hand is doing, that the other hand doesn't necessarily know what it's doing. Okay, like the guy that is in there selling the mortgage-backed securities is a very different from the guy that looks at SecDB every day and sees what the overall exposure is and how much they need to hedge themselves and where there are markets that could have a problem that allows Goldman Sachs to be able to get out of markets before everybody else. Okay. They're just like completely separate things. But then the split side of it is why did that guy that sold the mortgage-backed securities to them, why was he doing that? Because if it's such a shitty product, because they wanted it, right? Like, back then, everybody wanted mortgage-backed securities. Freaking everybody wanted them. It's not the bank's job to come in and say, that's a bad investment, we're not going to offer that product. Okay, like, if you do that, ain't nobody going to do business with you, right? That's not the way that a market works. It's not your job to make those decisions for clients. Your job, what they pay you for, what you make money off of, is being able to provide them the things that they want. And at that time, people wanted mortgage-backed securities. And you know what? They weren't. It would the with the whole housing market and everything. Hey, Ace. The bull case during the housing market bubble, as we call it, was not a bad one. Okay. It ended up being bad because the government stepped in and created situations that were always going to lead to a bubble, right? But the actual fundamentals driving the bullishness were, real factors. And they're factors that are still a factor today and are even stronger now, right? It's like, since 2008, we don't build as many houses. It's getting harder to build houses. It's getting harder to find places to build them. It's in a place that people actually want to live. It's getting harder to find the labor to build them. It's getting harder to purchase some materials to build them. Like, the cost of housing is likely to continue going up. So what do you think people are going to want? Going to want mortgage-backed securities. That was a good investment. I don't know. And then it just so happened that the other part of Goldman Sachs was looking at it and was like, oh, okay, well, based off of our model, we need to go and do this. So they did it. And then everybody's like, oh, that's not fair. Okay. But you just wanted it off their books and didn't care. Well, yeah, of course. Yeah, this is like when SecDB gives you out the number. SecDB gives you the number. Devil says, what about the crypto crash, bro? Well, the reason that people are giving for Bitcoin falling over the weekend is because a lot of Bitcoin mining in China has gone offline. So China is really truly following through on this, and they're shutting down Bitcoin mining. And I'm sure that this will start to apply to just like Bitcoin transactions in general. That was a significant portion of the global volume. It's a very bearish thing. Can Bitcoin hold 30,000? I don't know. But if we were to drop through 30,000, that's a pretty key point for a lot of people. Very high probability of stops below that price. Bitcoin headed to zero this next month. Yeah, if only. It had me thinking, you know what I was thinking about this morning? That was kind of a related thing to that. Have you guys, do any of you guys follow all of the drama on Twitch? I know this is, again, it's going to seem like this is like really far out, but if you stick with me for like 20 minutes, then maybe 20 minutes from now, you might see how it kind of ties back in. Devil Jin says, oh my. By the way, I love the Tekken games. I totally suck at those kinds of games. But I think that Tekken is a really well done game. So for those of you that haven't been paying attention, or that don't pay attention to that, and really, you shouldn't. I don't know why I do. I see it on Reddit, so I guess this is how I know. But Twitch has a problem with a number of streamers because their terms of service in Twitch explicitly state that you are not allowed to have sexual content. And there are a number of creators that are very popular on Twitch that are really popular in making money because they provide sexual content. And what they do is they just kind of find ways to skirt the rules. So one of the rules is that you have to be fully clothed. So you can't just be on stream in your underwear, right? That's one of the rules, right? Oh, well, but swimwear is allowed. So you can have a stream in your swimming. So then they say, oh, I will just have a pool in my front room, and I will stream me being in the pool all day. And that's what they do. And that's how they get around the rule, because they're swimming, it doesn't break the rule. Well, so what Twitch decided to do was they decided to make a new category. They didn't ban anybody. Listen, if I was in charge, I would have been like, bye, you're making it, sexual content. That's your whole channel. Go be on Chatterbait or whatever it is that they use for that sort of stuff, right? But they don't. They don't ban them, and they say, oh, we'll make a separate category. So they made the beaches and swimming category or something like that, right? And when they all got moved into that category, like, they didn't get very many views, and so they stopped doing it. So then they decided, well, you know what's another category that we could maybe get a lot of attention from? How about ASMR? So here you got these girls doing gross stuff into, like farting into the mic and stuff like that. Like, what the heck? And this is their stream, right? And of course, everybody on Twitch gets outraged and everything else like that. And they got banned. It was probably like a 3-day ban, but they got banned. Okay. So how does this apply to us? So here's the part where what I was thinking about. One of the storylines that I see when I'm reading the Reddit threads and stuff, like I think the best expression of this was one of the streamers that I follow, because he's here from Utah, Hair Seller, was saying, you can take it both ways, right? You can say that this kind of content shouldn't be allowed while also admiring the hustle. And my immediate thought was, well, but hustle is not inherently admirable, guys. Okay? Like, the market doesn't care how hard you worked. It doesn't. Remember this, because this is an important thing for your life, and especially for trading. Okay, there are a lot of people in trading that work very, very hard, but they never come up with anything that is really very effective at predicting future price movement or managing risk. In the long run, they lose money, and the market doesn't care how much time and effort they put into it. They lose money. Right? And there are people that put years into this. I've literally met people that have been trading for decades, and they continue to lose money hand over fist, and they just keep doing it. Okay. Market doesn't care about hustle. And then you should say, like, well, should it care about hustle? And I say no. I say, if you go and you put all of this time and energy into making trash, it's still trash. And you're still making trash, and you're still a trashy person. And it doesn't matter, you know? Is it admirable, the hustle? Like, what is admirable about wanting, being so willing to do literally anything for money? What is admirable about that? You want money so bad that you'll literally fart into the microphone for thousands of people. There's nothing admirable about that, right? Nothing admirable about that. And but that's what I was saying. Like, that's how it comes back to the markets. Is like the thing that really matters is the end result of your work, and not necessarily how much you put into it. In fact, the less that you can put into it and still get a great product, the better, right? Yeah, it's not about hard work, it's about floor trading courage. Well, that's this whole thing that, like, you got to remember that you can make a lot of money in the short run by taking on a lot of risk, right? Yeah. Somebody there asked about Dogecoin. I would think that at some point in the future there will probably be another Dogecoin pump. Whether that pump will get as high as this current one is, I doubt it. But it's a common thing. Like, Dogecoin gets pumped more than anything else, and so at some future point, everybody's forgotten about it, and I'll probably forget about it, and then you could go and buy a bunch of Dogecoin for like $100 and become a millionaire off of it. Yeah, absolutely, probably will happen again in the future, unless there is like a real complete and utter collapse in the cryptocurrency market. Like, if the worst case scenario thing about Tether came out and everybody realized that the whole market has been based on fraud, then, you know, there's a good chance that cryptocurrency just dies and it just becomes, like, you know, worth cents, and it never really takes off again. Like, there will still be rise, people will still trade it and everything, but it will never get to the same kind of market caps that they did before. But that's super speculative. Kind of seems like, you know, I have some concerns about Tether, but I don't know if shit's ever gonna hit the fan, you know. SHF. I don't know if SHF is ever gonna happen. Anyways. Crypto died when they tied it to stablecoins and exchange trading instead of on-chain only. Well, you're not wrong, but the reality is that they've only been able to have the run that they had because of the stablecoins, right? Like, the reality of the situation is that Bitcoin turned out to be not very effective for making transactions with the way that it was. And instead of fixing the problem, they doubled down because they wanted to make money off of the mining. And so they basically had to remarket the coin. It wasn't transactions anymore. It was digital gold. And then they pumped it up with a bunch of stablecoin money. And without Tether, Bitcoin literally would not be able to have the price that it does. In fact, I'm not even sure if the 2017 run would have happened without Tether. So, I'm looking at my chart and I'm like, man, it seems like the Treasury has been reverting for a while now. But it really hasn't. It's only been 15 minutes. By the way, remind me, what was Ace thinking when he came in? Why are we so far above VWAP? Oh, we're looking for long at 73. Lewis should just wait for the open. Let's see what they do on the open. Oh my gosh, I did. You know what? So I want to tell this again. Okay, he is long at 73.25. So I've got one of the combines wants me to do a video. I can't go into the details about what they're doing, but they are making a change to one of their rules. It's not like an earth-shattering change, but it is something that it's a really good change, actually. So that you know, they just want me to try it out and make a sponsored video. And I'm like, I'm down, right? Like, I have some really big problems with the combines and everything, but there are some reasons to use it. And if they want to pay me to do a sponsored video and we can be open about it, then I am 100% on board. Let's do it. And I could go in and trade it and it'd just be like an absolute dismal failure. It's okay. Although I will try my best. But so I was going through and I was like, okay, well, it would be really great if I could pass the combine with a robot. I don't think that I have a robot that would be guaranteed to pass it every month. I have some that, you know, they can kind of YOLO and get lucky. You know what I mean? Well, so there's one algorithm that has kind of been the one that has kind of survived the culling of the herd, that has been doing well. It hasn't been taking a lot of trades lately, but maybe we just use that one. We'll see what happens. It's possible, but here again, it's possible. Like, if the market activity picked up, it might start taking a ton of trades and it might do really poorly. And there's still a couple of things that I wish we could do about it, but I don't think that I'll have made those more complicated systems before we want to do this combine in July. So then I started going through all of the other algorithms that I'd done in the past. And there was some that, like, remember, like, we back tested them. They looked pretty good. So then we started trading them in sim and they started doing poorly. So we went back and back tested all of those now with the 6 months more of data. And yeah, it really was like they did really well last year, and then this year they do terrible. It was really striking to me. And it was like, that's what I should have expected, but it was still really disappointing to me. It was like, I don't really have, like, the whole thing is, you can either YOLO or you can do something if you really know that it's going to work. You know what I mean? Well, I don't really have something that I really know would pass the combine. My own discretionary trading probably could pass the combine, but it kind of depends on how well I understand the market. You know, like, if I understand the market the way that I did on Thursday and Friday, because, Friday wasn't very good for me, right? Then it'll just be a complete disaster. So, but then I was thinking about the Ace trade again, because I have like a different version of it on here. I need to modify it again because it's using a one range data series, and that's not going to work. But hey, maybe we should just have Ace do the combine. That would be fun too. Because I think I'm pretty sure that he's had multiple periods that would totally pass the combine, and that kind of makes me wonder why. Well, I guess he's trading his own account, and probably his own account is big enough that it wouldn't really justify, unless you really did the big combine. If you do the big combine, then you could be trading lots of contracts. You deserve more subs and views like Iman Lusk deserves more. Wow. I don't know. We should never come in and say, I deserve something because X, Y, and Z. I think that I do make a good content, but at the same time, I also understand why it's not always going to be entertaining to everybody all the time. So, and we've gone through waves, right? When the GameStop thing was going on, because we were on to the GameStop thing very early on, and we were getting tons of views, but that died down very, very quickly, right? Okay, so there's the open. No, it didn't do it. Okay. I kind of wanted to get in a little bit earlier than that, but I don't know. Looks like it's okay so far. And we should come over in here. Okay. It's not terrible. It's not quite as much delta change on the open as I was hoping, though. Oh dear. Yep, I caught pretty bad spot there. ETH is at least trying to make it self-regulating. Oh, it's questionable that there has no deflationary measure that keeps up with price. Yeah. I have to say, like, I think that there's a fundamental problem with like a decentralized currency, the way that cryptocurrencies are. But Ethereum in particular, they are doing some really amazing things. Okay, this is bad. Yeah. I don't really have anything over here in the E-mini, I don't think, but so where it's like, I remember there was this period where I just did amazing all the time, right? And lately, it's been a tough slog in the E-minis. So I can think back to a couple of times where it was like there would be sells and I would just be short from the top and it was like easy trade and everything. But I haven't been seeing that when it's been doing this. Maybe I just got too used to going long. I don't know. Yeah, that's a pretty negative delta, I must say. That is pretty ugly. Are the treasuries bidding again? Yeah. So if the treasuries see some more buying, we might see more flattening and see the ZB really come up hard. That is a really ugly downturn in Delta. That's a good 3K. The first 5 minutes. I'm going to hold really tight risk until I can get something that to really run for me, you know. Nope. Well, there's a little bit of responsiveness there, actually. Wasn't quite what I was expecting, though. Say this this open doesn't look very tradable? Well, I don't know. It's a little turvy right now, that's for sure. I mean, if they buy the dip and pull this out, then we're all going to be like, oh, why wasn't I buying down there? Pretty heavy sell pressure, though. Somewhere around 4 to 5K selling since the open. Looks like I was finally able to make a correct read there. I don't know how consoling that is when I read it wrong so many times, but that is to say that the fact that I got it correct at 41.66, even though there was a reason for it and everything, kind of makes you question whether it was that's the actual signal or whether it was just random. He says, well, shit. This is a tough one, Ace. Is this long right here? I say yes. Come on. No, chase it. Oh, okay. What is Powell saying tomorrow? Why do we have to listen to the Fed? Aren't they the ones who betrayed us? Well, it will be interesting to see how he tries to respond to the market. Yeah, it will be very interesting to watch him say it. I would still, what I said at the beginning of the stream, that there's a lot of things going on, and there's a real tendency for everybody to try and attribute everything to the one major storyline that's going on, when that may not actually be the case. And so, okay, well, that one did not work at all. In fact, it is right back to where I had originally took it. They're still having issues with this note at 41.67, though. Looks like NQ is leading this today with ES fighting it. Aren't markets supposed to go down after the expected rate increases? I don't know. Remember all those people telling us that when the Fed tapers that it will be a positive thing? Do you remember that? That there doesn't be looking so good right now, does it? When they were all saying, oh, the market will be relieved that they're concerned about inflation and that they're going to do something about it. You need help building a computer. My thoughts are i5, 11, 600K, 16 GM, NVMe. That all sounds pretty good. You gotta remember that, like, so if you watch that video about the trading computer hardware, you know, a lot of that was like, here's what matters, here's how it affects your trading. But there's also kind of this thing that's like, you know, most desktop hardware will get the job done, right? So anything that you build that's new is definitely going to be good. But like in the stats that you gave me there, for instance, having 16 gigabytes of RAM, that's good. I think that 16 gigabytes is like a minimum. And having a NVMe hard, like a Samsung 980, that's a good hard drive. That will make a big difference too. And I don't remember all of the model numbers for the Intel CPUs, but an i5 would be just fine. So there's nothing, you know, well, if budget is no issue, I would build a Threadripper, but you don't need that for trading, right? Or the new AMD CPUs. I don't know if those are out yet. Oh, did we really, like, I came up, it took my profits, and it's coming back down again, huh? That's funny. Yeah, you know, oh man, you shouldn't have given me that thought. I was like, one of the things was that I'd been saving up because I wanted to move over brokers and things like that. And man, I tell you what, data is really expensive these days. But then I also wanted to get a what do we call this? A teleprompter, so that I can try and make more videos. Didn't do it this weekend because I was babysitting and I had all of the kids. I tell you what, when it's just me and the baby, and I can try and make a video, but when I have all of the kids, like, it's not happening, right? So like that was like the last piece of equipment that it's like, I'm thinking like, what should we put on the equipment list next? I guess I could get some more room treatment. There's still a couple of corners in here that I need to fill out a little bit, but you know, it's not like a necessity. Probably if I did get anything, I would get curtains to go over that. That would probably improve things a lot. Curtains to go over that. Curtains to go over the chalkboard too, so that to block the echoes. Bits are swinging pretty fast on NQ. Well, I continue to see this black hole at 4167 that they just like slip into, and then anytime that they get below that, the buyers are able to push it back up above it. Intel is better on Windows. Well, so at the moment you really get your money's worth more with AMD. But if it's a question of just pure performance, it really depends on the application. Like a NinjaTrader, for instance, is like a really great example. You know, they can take advantage of multi-threaded applications. So having a bunch of CPUs is really useful. But at the same time, how often do you use 100% of your CPU? Well, just having NinjaTrader open. Not very often. It happens, but not very often. So really that power is going to matter more if you're like back testing. And then it's going to matter like, what is your back test? Like if you're trying to do tick replay, which is a lot of what I do, although back testing tick replay doesn't seem to be very effective. Just warning you. But if you're doing tick replay, theoretically the Intel will be faster because it has better single-threaded performance and tick replay has to be single threaded. So, get what I mean? CQG is still having the technical problems, RJ Will? Really? I saw that when I came in this morning. It's funny that we haven't mentioned it, yes, until now, but they're having a margin calculation issue. So they are adjusting margins up 25%. And then they'll turn it back when they say that everything is fine. RAM is super important if you are the volume trader heavy charts. Yeah, I really like it. I have found that 16 gigabytes of RAM is really a minimum. So I didn't really notice it too much on my trading, but when we got to, when I moved up to 32 gigabytes of RAM, it really improved my backtesting. I can do much more complicated backtests with 32 gigs of RAM. Like I can do all of the machine learning optimization kind of stuff. Yeah. I have an anger issue. Do you think little things irritate in people and I start lambasting them? What do you think? Should I visit or buy a punching bag? Well, I think that everybody has a natural tendency to want to try and control other people, right? Man, I totally got suckered on that cross of the open, didn't I? Sucks. This is a difficult market. I've got some winners. I guess in the end, I'm mostly, my performance so far seems mostly random, but I think I am done. Okay. Well, this would be exactly the kind of market that we would expect that strategy to have a difficult time in, right? Small exchange release cannabis futures? What? Really? Oh man. I don't know. What do you think about this? Kind of seems like a real battle. Yeah, I'm still on my sim account. Like, I was thinking, okay, if I get 1, 2, 3, and then maybe I would switch it, but like, no, it's not happening, is it? It's not happening, is it? By the way, as all of this has been happening, like, well, the treasuries kind of did come back down a little bit, but they don't seem terrible as excited as the E-mini does. Perhaps what's going on in the E-mini is that there is a lot of people trying to make plays here because of what happened on Friday, but like we're still in summer trading. Like the liquidity is still kind of like summer trading. That could be why it's being so difficult. I don't know. Anyways, I was talking about the anger thing, right? So in a if we were all cavemen, right? Then what somebody else does, if they do something dumb, that could be really bad for you, right? So people kind of have some interest in controlling other people. Like that's just the way that people are. And that instinct can kind of get out of control sometimes. And I think that the way you combat that is you just say, it's in modern society, it is better that some people are wrong sometimes, then that we control people. That giving people the freedom and the autonomy, in the end, makes things better for everybody than everybody always being right. Right? Just remember that being wrong is not the worst thing in the world. Jigsaw says even some demo trades are getting rejected now. That's really. That's kind of funny. The freedom to make mistakes. I agree. There you go. You know, I was thinking about, because me and my wife were talking about the other day. It was like with the masks. I saw this study the other day that they had found people that had worn masks all day and then looked at what was on the masks. And although they didn't find anything that was likely to infect the people that were actually wearing the masks, the pathogens that they found on the masks were pretty scary things. And it was kind of like, you know, like, I think that there was a lot of good, and still is some pretty good evidence and favorable to masks, you know, encouraging people to wear masks, especially since COVID is spread by the spittle, and the mask will control some of it. So it's not a perfect solution, but it decreases some of it a little bit, right? But when you look at the evidence or the science that they've done so far about, like, did requiring masks impact the spread, or how beneficial of an impact was it? I really kind of question, like, was it really necessary to browbeat everybody over it the way that we did? You know what I mean? That, like, if you didn't want to wear masks, you were this evil person, and we're going to force everybody to do it, and we're going to arrest you if you're outside without it. Like, was that really necessary? But it's exactly that situation. That's exactly why that instinct exists, is because there are situations where what you do could have a negative impact on everybody. And so we kind of evolved this thing to try and force everybody into conformity when there are things that are really, like, important to the security of the group. Manager. Did the FT71, is that a book you made? Mask for the sick only. Well, yeah, except for if you don't know that you're sick. I don't know. When I think back on that stuff, the thing that still irks me about it is that the thing that really matters is your elderly population, right? The people that were dying from this are, like, in their 80s. Seems like a really important point to note if you're trying to reduce the number of deaths, while at the same time having as minimal of an impact on the economy and everybody's lives as possible, you know? But then it kind of turned into this thing that's like, no, everybody should just do this anyways. No, but he recommends it when it is good. Oh, it's not a book that he wrote. It's a book that he recommends. Yes. Well, but he makes really good book recommendations. One of the things that keeps crossing my mind with Futures Trader, and maybe I need to go back and rewatch some of the videos, because he trades with some, like I remember there being a lot of emphasis on, like, those higher time frame kind of statistics, right? Like on volume profile, when we visit here, and then we're likely to go to here, and this and that. And every time that I've gone and tried to backtest those, and granted, I haven't done nearly as thorough of an investigation on it as I probably should, but, you know, the few little ones that I've tested out, it was kind of like, actually, that's, like, way more random than you would think. And when I think about a couple of the other things that he does, like particularly the way that he sizes things and everything else like that, the more that I start to realize that actually, you know, what he's doing is it's risk management, right? Like, you can make a lot of money in the short term by taking on a lot of risk. And then all you got to do is just be able to use your discretion to know when it's not working and reduce your size, and to know when the markets are doing crazy things and be able to account for that. Because where those risk-taking strategies really get screwed over is when markets get volatile, right? But that doesn't mean that you can't make money from a risk-taking strategy. It just means that you need to really have edge on the risk management side of it, right? And I'm starting to realize that probably the majority of where futures trader, whatever, because we don't really know how much he's made from it, you know, but I'm going to bet you that if he's making money, that probably the majority of his edge comes from managing the risk itself and not necessarily being able to predict where it's going to go. And he was making a cup. Well, that rise in the E-mini was pretty impressive, yeah? I'm wondering, like, on my R-squared, it's still really low, so... But to the thing, if your edge is primarily taking on risk, then yeah, being able to manage your emotions and just take the trade without getting yourself into trying to affect it is going to be a really important thing. Because like, the whole thing is that you're basically making money by doing something that is kind of not advisable, right? You're making money taking the trade that nobody else wants to take, basically. And because you have a wide stop, although he doesn't do it from taking a wide stop. That's the thing. Is like, if you go and you game out that kind of a strategy, depending on how far you can really let your runners ride, you could end up with an average loss that's larger than your average win, right? Because what's happening is you're taking on a lot of risk at the beginning and you're taking it off really quickly, right? Ace kind of does that too, right? He'll take a couple of contracts at the beginning, but he'll take a profit after only like 8 ticks or whatever, which happens very, very frequently. Now all of a sudden you have like all of this room. Now you have like equal risk reward, except for that, or even really favorable risk reward where your target could be like really far up here. But you've already made money on it. So the risk really isn't actually a risk anymore, right? It's just like the risk of breaking even on the trade. Oh, okay. No big deal, right? But how did you do that? By taking on a lot of risk, but just only taking on a lot of risk for a short period of time, right? But then again, where does that kind of a strategy fall apart? You go in and you take a trade and immediately a flood of orders comes in against you and stops you out your full order, and maybe you even catch slippage, right? And if that happened every trade, then that strategy would suck. Like, let's say that it was 50-50, but 50% of the time you did full stop out and 50% of the time you caught your runners, it probably wouldn't work very well, right? It's like you have enough of an edge at the beginning that there's kind of some momentum with you, and so it tends to work out. And you just have to know the time when, like, it's likely to just like full stop you out and just not trade that. Horrible strategy, good results. The thing is, he hasn't been taking the same trades that he had described to me before, so I don't know where he's getting the other bit from. It seems to me that it's still kind of the same rules on like the higher time frame and everything. About, you know, because he does tend to be looking at the trend and being like, oh, well, I want an up or down or whatever, but I don't know how he picks his price anymore. Volume profile is like tape reading just on the big disc. Yeah, well, I mean, one of the things that I definitely look for is some sort of a distribution. I don't just look at the volume profile and say, oh, here's a distribution, and then that's where I want to take it. There's certain kind of behavior around the distribution that I need to see that indicates to me that there's a lack of latent liquidity there at 4167. And that's why I was taking it down in there. I should have taken it again. Like I took 167 and then it came up to 73 and I was like, all right, let's get it on. And then I didn't take it when it came back down here again. I was like, okay, fine, I'm just going to wait. And then when it got to the open, I took it again, right? Cool. Broke my own rules taken, yeah. But did you make up the earlier loss? You're probably still long, so probably yes. So we gotta come back over here and look at a bigger profile. 4196. 4196 to 4190 are single prints. And come back and look at the VIX. $41.99. Oh. So there's actually a reasonable chance that it gets to 4,200 today. Jeez. That'll be funny. That'll be funny if that's what they do. Oh, Vets Bullard talking? Oh, you know what? I didn't have my financial juice running, so they were saying stuff and I didn't even catch it. So maybe some of this up movement was because of Fed comments. We still haven't returned to as much in-person work as we could do by the fall, says Kaplan. That's only been the last 15 minutes, so I don't think that was what explains all of the nonsense around the open. The Supreme Court throws out lower court ruling that had allowed shareholder class action lawsuit against Goldman Sachs over alleged conflicts of interest. Huh. I think rules-based trading is important for long-term success. Yeah, the right rules, sure. Oh, I didn't catch that the 10-year was dropping back down again. Should have been keeping a closer eye on that, huh? Could have caught a tick up in there at 0.5 and 0.1. Rules are meant to be broken. I don't know about that situation. I totally get how he feels, right? Like the problem with this sort of a thing is that he's breaking a rule that you're going to get away with breaking most of the time. You get what I mean? Like if you keep trading it and you double down, like usually it will come back and you catch a winner. It's just that the one time that you don't, it's really bad. I guess we're taking it off right here at $100. Rules are not to be broken, rather bent. Like what he's talking about there is exactly where I've screwed myself over before, right? So you get into this this strange world where you've taken X many losses in a row and you don't even realize what you're doing and you keep trading it. So he's breaking a rule that I've broken in the past and blown counts from breaking. Got away with it this time though. I think though on this particular trade, really what we should be doing is we should be coming back and looking at this and being like, okay, so like we took a long up in here and it didn't work out, and then here was a long that didn't work, and that one maybe you didn't want to take. So this is where I'm getting at. Like the trade was they sold it and to take it long. And that was actually, well, I thought that maybe they would just straight up buy it on the open. When that didn't happen, I should have been thinking, they'll come back and I can buy the dip there. But if that's what I was going to do, why did I have to do 1, 2, 3, 4, 5, 6, 7 trades until I got to that point, right? Not all of those were losers. They were actually 50-50, right? I really should have been sitting on my hands a little bit longer until that distribution down at the bottom had really formed, right? So really, I think the mistake was really we took too many trades. At least I did, and it sounds like the ace maybe did too, because he lasted a few times before he cut the winner too. Bots ain't around. Yeah. He's usually not around every day, but you can usually message him on Discord and he'll see it eventually. Bullard says the community is only now starting to talk about tapering and it will take some time to get that up and running. This is a pretty good run. There could still be another 10 points in it, though, huh? Kind of goes back to what I was saying way earlier than that, right? That like, hey, you know what? If they buy the dip on this today and it ends up being a positive day, everybody's going to have a very different outlook on the market, right? So let's just like not get too excited. You're done for the day? I think I'm probably done too. Well, we still got an hour. We should continue watching the treasuries to see what we can catch from there. So there was a little bit of a spike up there in the treasuries, perhaps off of some of Kaplan's comments. Hold on, I need to blow my nose. I prefer to just watch the rest of the show. Thank you, HF. Okay, so Crackhead's saying, I think the best personality trait in trading is being a dickhead, and the best personality trait with humans is to be neutral. No. Well, yes and no. So I think really the trait that you're talking about is agreeableness, right? I think what you mean to say is being agreeable, right? Just remember though that any kind of personality trait, like a lot of us, we want to think, yeah, there you go. He says yes. We want to think of traits as like good or bad, right? Like being agreeable is good. Being conscientious is good. What's the third? Oh, being open is good, right? But there are people that are very low in those traits. And guess what? Like there's reasons why. It's because there's nothing inherently good or bad about those things. It's just that here, particularly in American society, especially when it comes to openness, we've always kind of wanted to be open people, right? Well, there are disadvantages to openness. There's disadvantages to conscientiousness, and there's disadvantages to agreeableness, right? If you're very open, then what happens is you will very easily buy into stupid ideas, right? You will let people into your lives or into your community that you shouldn't, and then you get taken advantage of that way, right? So the problem that the left always has, because the left is very, very open, is that people on the left start to develop very radical ideas about how they want to change society that are just like brain dead stupid. And they have a very difficult time trying to pull it back, because they've always been about like trying to empower people to be revolutionary of sorts and really be progressive and everything. And then all of a sudden it's like, oh, whoa, hold up, too far. That's not good. And by that point, you've already given the animals control of the farm. You know what I mean? Okay, that's the problem with openness. Okay. The issue with conscientiousness. So conscientious, like think of Mitt Romney, right? So these are people that, they want to be on time. They want things to be orderly and clean, but the disadvantage to conscientiousness is you're not as creative, right? You dismiss ideas. You dismiss ideas too quickly. You don't give thought to the right things. And so a lot of people, when they're under the supervision of somebody that's extremely conscientious, they often don't feel like their work is valued and appreciated in the way that it should be, right? These conscientious people can end up being cold, right? So there's a disadvantage to being very conscientious, right? And then we come to the trait that matters to us, right? Agreeableness, right? Being very agreeable has some real social advantages because people are more likely to like you. People don't like disagreeable people, but very agreeable people get taken advantage of, right? They let people do things and they take on obligations that they really shouldn't. My wife, probably too agreeable, right? Trade has a link in the lobby here. Yeah. But in trading, yes, agreeableness, being very disagreeable, seems to be a trait that is very valuable in trading. Why is that? Because so much, the whole game, particularly for our role in it as retail traders, is about seeing what the prevailing market narrative is and being able to identify when it's wrong. Essentially, right? This, like, Nicholas Nassim Taleb is a great example, man. That guy is disagreeable, almost maybe even more disagreeable than myself, right? I kind of have this thing where I'm on stream and I've always been trying really really hard for the social approval, I guess you could say. And so even though I'm an disagreeable person, the thing that's always going through my head is, how can I convince people of this thing? How can I convince people to do thing? And I very much feel like I don't have a lot of success with it, but Nassim Nicholas Taleb, that guy does not give any fucks. Technical term. I'm sorry. I shouldn't have said it like that, but he just don't give an F at all. So he wrote this paper about issues with Bitcoin. It was a well put together scholarly level quality paper. There wasn't a lot of like research or anything like that in it, but it was a very astute opinion from somebody that very much understands these things, right? And somebody came out and was like, I have some problems with what you said in your paper. Would you like to discuss it? And he said, no, F off. If you want to dispute something in the paper, then go and write a rebuttal and put it out there. But I'm like not going to get out on like some stream and have a live debate with you or something like that. He just completely told them off and said, no, you're not being genuine. You know what I mean? He's a very not agreeable person. And that's how he became. We don't know how much money he has, but he has a lot of money, right? Because he was able to make money trading options from predicting hard to predict events. That's his whole thing. So what did he do? He understood the options and everything, and where there was like a good mispricings, and he was able to identify situations in the market that you can't just predict from probabilities about things that through logic and understanding markets that you know are a pretty good chance of happening, and was able to make money off of really big, what do they call them? Black swan kind of events. And how are you able to do that if you're agreeable? If you always see what everybody else in the market is saying and go, oh yeah, I totally agree with that, right? You need to be able to come in and say, no, the market is wrong about this. Everybody's freaking out because of the Federal Reserve changing the interest rate, but really the reason the market is falling is because of all of the gamma expiring, and it's nothing, and next week it's going to go back up, right? The trader that's able to do that, it has a much greater chance of success. And the trader that's able to do that is going to be less likely to go into something where it's like, oh, yes, a head and shoulders pattern. Everybody says that's a good trade. I should take that one. No, the disagreeable person says, well, is it actually? They go and they backtest it. They realize that maybe there was some edge in it before, but everybody's doing it. And if the real key to like really making big wins is being on the other side of the crowd and then being right and the crowd wrong, disagreeable person is much more likely to find it. Right? Suppose a person X said to his wife, she is a craphead, stupid for no apparent reason. She should become more agreeable. Yeah, maybe, but that's not necessarily being disagreeable. That's just being a dick. Head and shoulders is only for dandruff. You know what's something really funny? I don't get this one. How can I show this to you? Yeah, this is perfect. Okay, here, wait, let me make it big. Look at this chart pattern here. What do you think? Let's wait, hold on, we got to change the bar width. Shouldn't be 8. Maybe 2. Maybe 3. Okay. What does this look like? Does that look like anything to you guys? Do you see it? Do you see here? Hold on. You put your answers in the chat. What do you think this looks like? And here I'm gonna draw it for you. Okay, here it is. It's oops, there we go. I'll show you what it is. It's ascending support. That's it right there. Ascending support. We're gonna revert. We're gonna bounce right off that line, and we're gonna go higher. That's what's gonna happen. No, of course not. Come on. This is like the most obvious Head and Shoulders I think I've ever seen in my freaking life, and I don't see anybody in the Bitcoin world talking about it. Like, you go on TikTok and they're all pointing out these chart patterns, and they're like, here's this moving average cross, and here's this thing. Here's what they considered, the chartists considered to be the strongest, most reliable pattern. And I don't see anybody here saying, hey, if we drop through 3K resistance, this is breaking the neck of the Head and Shoulders, and Bitcoin is just going to absolutely puke. None of them say that, because they just see what they want. They just see what they want to. But I'm just so surprised I don't see more people talking about it. It's like a really, really clear, obvious Head and Shoulders pattern in Bitcoin. And but I don't really care either, because I'm like, I know that doesn't necessarily have is not really predictive the way that we say it is. There's definitely this pattern where it's like they try to get higher, they can't do it, they break the neck, and they puke. Like, and I do think that could be what happens in this situation. Then everybody will say, yeah, but Head and Shoulders was obvious, guys. And then maybe next time around, because it happened that time, they'll pay attention to that signal a little bit more. But then that's recency bias, right? Yeah. Anyways, a bear flag. Well, there's that. It's definitely at a critical junction. I think so. Oh gosh, I just killed. Oh no, I didn't kill it. I'm just not using the right tool. There we go. So I kind of look at it and I'm like, this Chinese cracking down on the mining has been like, I'm just going to call it really bad luck for Bitcoin. Like, there's just like the exact wrong thing happening at exactly the wrong time. Oh, look, Discovery Trading Group responded to my thing where I was talking about the change in the curve. Well, the real driver set that's been at the almost entirely isolated mid-curve steepener in the recovery was so much of an outlier. There's a long way to go to normalize that part of the curve. Not so much in the short end or the long end individually, the 2 cents. Yeah, no, I think he's right. He's right. So we've been talking about the yield curve, and what he's saying is that if you look at a curve normally, like normally this would be like a really flat yield curve, right? And this would be like a really steep yield curve like this, something like that. And what we have right now is more like, and he's saying that this mid part of the curve being so high is really the outlier thing and needs to normalize back down. And he's right. It's just that the thing that happened on Friday was that 30-year, really big bid came into the 30-year and really pushed down the long end of the curve. And there was a lot of flow on that. And I found that really concerning. So it's given so much of that back today, though. Yeah, I don't know. The 30-year gave up some of its gains, but the flattener didn't come back. So, like the 2 and 10. So how should we respond to him here? See, here's his picture. Show you his picture. The blue line is the Treasury curve as of yesterday. The white is 1 year earlier. And the yellow is one line earlier prior to that. And what he's saying is that this 7 and 10 is, well, 7, 10, and 20 are higher than they should be. He's saying that the 20 should come down, that they should be buying the 10 and the 20. But what I'm seeing is they're selling the 30. I forget what we call this. What is it called? I wrote it down in my book here. I'll tweet that. Okay, so did Ace ask me a question here? What information can we glean from the fact that the ES is so high above the VWAP? Oh, okay, good question. If you're talking about, well, where is the VWAP now? You're probably talking about the extended session VWAP, right? 4180. Well, so here's how I would look at the VWAP. Institutions used to look at the VWAP and the TWAP, that's time weighted average price, in order to judge how effective their execution was. And if you can, if you want to buy, then you would prefer to buy it below the VWAP, right? So if you're consistently buying it below the VWAP, then that means that you got better than the average execution, right? So if we're seeing price get really far above the VWAP, that suggests that buyers are being very aggressive, that they don't really care how inefficient their orders at that particular location may be, right? Now, the split side of that is that institutions don't really use the VWAP in that way anymore because too many people had caught onto it. And you would really get these situations where, say there was some sort of a market decline for whatever reason that it was. And so you would see these institutions would come in and be like, oh, well, we're below the VWAP. I should buy it. I should buy it because I'm buying today. And the day traders could just smash it down and make money off of them over and over and over again. And so it turned out to be like a bad way to trade, right? So I'm not so sure that us being above or below the view. One thing that I have found is if we come back to a VWAP, there is a pretty good probability that you're going to bounce, but you make way more money when it crosses, right? Doesn't happen as often, but you make way more money when it crosses, right? So that's kind of there's kind of a kurtosis in a really strong fat tail in the distribution of that you got to be aware of if you're going to try and use it for prediction purposes. But in terms of like a, market condition, they really want to buy it. They want it at 4,200, maybe higher. What do you think? Do you think we're going to get to 4,200? That we're just going to stop there? So the VWAP is useless. The market could bounce across the VWAP. Isn't that true about any random place? I suppose it depends on how you look at it. I guess what I was getting at is that there is behavior around the VWAP that has interesting statistics, but you could probably come in and completely ignore the VWAP and be fine. VWAP is a great look at 1 standard, 2 standard, and it gives a good feel of the programs. Yeah. So if you have an indicator that will show you standard deviations away from the VWAP, then so we used to have some trades where if you were 3 standard deviations away from the VWAP, there was a high probability of a retracement, and that if you took the short there, you would win maybe 30% of the time, but you made so much more money on the downside that it was really highly worth taking. Pick a price right now on the ES 4200. Well, the reason why 4200 would matter is because there was a lot of gamma there last week, and it's been a place that the markets have been stuck at for a really long time. So when I'm looking at the volume profile and I'm trying to sort out what's going on after the fact, what I'm going to do is I'm going to look at it and I'm going to say, okay, actually for a while we were higher than the VWAP. We had to move away, found some balance here again. Then this was the balance area. They fell out of balance, and where did they come back to? 4,200. And once they had passed that, then they started crossing it a ton. So now we've had, there was a little bit of an increase, but then really in the end that they kind of moved away from that and into the expiration. Basically, the sellers won on the expiration. Now, what should we expect? If that was just a trade-off of the expiration, then probably they should come back to where the neutral gamma location was, which was 4,200. So then if they get above 4,200, I'm going to be thinking that was like this move up until now is like return to balance. If we go higher than that, and let's say that we get even above 42.22, which would be difficult, but if we got above 42.22, then I'd have to be thinking like a major perception in the market changed, right? That's how I kind of look at it. But that is all backwards looking, isn't it? I think that almost everything that I said there is kind of backwards looking, because like, do I have a probability of saying, will it move meaningfully above 4,200 or not? Did I ever have a thing that was like, there's an X% chance that it's going to go to 4,200? No, it was just like, I know that if we do bounce at 4,200 is going to be the area of interest. So that's not really predictive, but I wouldn't say that it's useless either, right? Bounce out 4,200 must be a new indicator. Well, it really, when we use the word indicator, I mean, I think, AC, you're using the term indicator a little bit too broadly for, not that I'm saying that you shouldn't use the term indicator in that way, but for the purposes of the conversation that we're having, indicator doesn't really tell you enough about what you're trying to do with it, right? Indicator to me is just some calculation based off of other market data, other market information that we have, right? And any of those things could play some role in a system in being used in some form or another. The way that I'm talking about it, it's kind of like a target, right? Just poking fun at how things either bounce or go off of everything. So, well, yeah, the E-mini especially, right? The E-mini will give you every possible little turn that you could ever hope for. That's why I think that the real question is more things like, does this particular thing... well, I've never been able to come up with the word. I've never been able to come up with the word. Predictive is not the word. Because you could come in and we could say, okay, if you have something and it's based off of time series data and you're able to predict the next move 55% of the time, then you could say that that is somewhat predictive, right? But that's not the word. The word that I'm looking for is more like causative, right? I'm much more interested in something that would be causation, right? If the Federal Reserve comes out and raises interest rates today, we said we had a emergency meeting, then the treasuries would, well, everything would sell. The treasuries and the E-mini would all sell, and that would be a cause, right? There's certain things that can happen that we know will cause other things to happen. So then the question becomes, can past market data cause future market data? In other words, is there a certain price level at which so many people are watching it that if it breaches that price level with a certain degree of leeway, that you're guaranteed to have that it will cause a sell-off, or vice versa? And I don't know. I've never seen anything that is reliable enough to say that it causes the thing to happen. But it could happen. It could just be that our methods of being able to identify the price level at which that happens is simply not effective enough, and that maybe if we had more market information, like maybe if we were able to actually see people's stops on the exchange, maybe we would be able to point out those particular price levels where there's actually like a cause, right? But from everything that I've done, I've never been able to find a technical signal that actually does that. Fair enough. But what we can do is we can point out that certain price levels were meaningful. Like that there was a gamma flip at 4,200 does make it meaningful. Does it make it still relevant now? I don't know. It's just like worth pointing out, right? Seth loves this stuff. Well, I feel like that if you want to find a technical edge, that's kind of the way that you have to think. But I don't know. I don't feel super confident in my technical edges at the moment. So Oh, I missed some of Discovery Trading Group's point here. It was just saying that like the flatness of the steep end of the curve is more wacky than it seems because of the demand because of where the 10 and the 20 and 7 are. But my response back to that was like, well, that's definitely a thing. That's definitely a thing, but there's something else going on that on Friday, like they were buying the 30-year like big time. When will your bot trade the earn to trade? We'll see. I don't know if that's what's actually. I probably won't say. I don't know. I was thinking about doing it in July, but that might change. Oh, I need to get. Why do I still have this chart open? Perhaps. Okay, so he's saying right bets / hedge adjustments on serious flattening of the mid curve via selling long-term yields. Sure, yeah. They're buying the 30. Okay, but why? Just keep adding $35 Carls on CSCR for July, looking to get over 10K. Wait, where did you even get that ticker from? He says he's just kidding, but where did you just make that ticker up? Heck no, I cut and paste. What? Oh, okay. You know what? I should have been taking trades in the 10-year there, but I guess I got distracted. I don't know if I necessarily would have seen anything. I may be falling into the fallacy of like, oh, it moved, so I should have been trading it. But I'm kind of just noticing that like, oh well, it moved, and I wasn't paying attention. What might I have missed? There is fire in my eyes there. I'm really interested to see what Discovery Trading says after this. In my response to that, because he was saying, so I said, well, what I really saw was buying coming into the 30-year, and he says, right, bets/hedge adjustments on serious flattening of the mid curve via selling long-term yields and buying short-term yields, which would imply that like they're selling the 30 and the 1027, and I'm like, why wouldn't you buy the 5, the 2, and the 5 and sell the 1020? Wait. Bill O'Reilly just tweets here on Twitter. This is what I use to get my international news. The only daily newsletter exclusively dedicated to world news, completely independent and nonpartisan. dailycheddar.com/Bill O'Reilly. Is that like a... Yeah, so you get your daily newsletter from yourself? Oh, okay. No, maybe it's not. Maybe it's not him. Maybe the Daily Chatter is just an independent website. Let's see what it is. The only daily newsletter. Oh yeah, of course you have to subscribe for $30 a month. No, thank you. Nope. I was just jumping to conclusions, it looks like. ECB's president Lagarde. The ECB is to discuss digital euro for July 14th. Oh. That'll be interesting. Fed's Kaplan says there's a strong bid for treasuries and it'll stay there. Fed purchases have an impact on interest rates, but so do the aging of the population and the slowing of workforce growth. Okay. One of the things that's been getting interesting from reading my interest rate book is they're kind of going into like liquidity preference and segmentation, where it's like some aberrations could exist in the treasuries just because people are buying certain parts of the curve because that's the maturity that they prefer, and not because that's really what it should be worth. So it kind of suggests to me that inefficiencies in the yield curve are really very, very common, and that they can last for quite some time, and that you can catch some really good high probability mean reversion trades from them. But it's kind of like, at what point do you say that reversion is worth taking? You know what I mean? So like this one that Discovery Trading is talking about, if I was trading micro treasury yields, I don't think that I would be taking it from the 30. Like I don't think I'd be doing a butterfly. I mean, it could work, but I would be too concerned about the 30-year just really spiking up, I guess. Right? Like, here's the curve. We'll take it. We'll say we're doing treasury, we're doing the yield futures instead of these ones, so it's opposite of this. But you get this like, and then it's like flat like this, right? And what they're saying is, we're gonna sell here, and we're gonna buy here, and maybe we're gonna buy here too, right? But what happens if, oh no, actually maybe it is because the overall curve is going to move up. Maybe it's because they expect the curve to turn into this. So in that particular case, do you make more? No, that wasn't a maybe. This is the no doubt analysis, but it's still, the question is like, if you were going to do this trade, why would you do it with a butterfly instead of just taking this side of it? Why would you want to trade this side of it? Unless you had a strong reason to think that the treasuries were gonna, I don't know, that the ZB was gonna, that it was gonna do this instead. Yeah. I suspect that Crackhead is Salim, but he's been much better behaved. So yes, up to 14. Oh, you visit Dubai every year, HF? I remember my parents, they did a work, like if you meet your quota, then you get to go on a work trip. And so he went on a work trip to Dubai one year. And then like right after that, 9/11 happened. And then it was like, I don't think that you'd ever go there. maybe I'm wrong. Maybe it's not as dramatic as it seems. I have a neighbor who, their son, who was my age, works in oil. And so he like lives in Saudi Arabia, but like they like live in a compound of sorts. The way it was described to me is like all of the Americans live in a compound that's protected and stuff. I was like, okay, well, as long as they're paying you tons of money. Like if I was making, $300,000 a year, I don't know what they make, but I think that's what they would have to pay me to get me to do that. I think that to get me to move out of Utah, you would have to pay me double what you pay me now, plus the cost of living difference. Oh, you have property? Wait, but to own property there, don't you have to be a citizen? So are you like have a dual citizenship? It's zero income tax. I have to admit, I seem to have been very misinformed about, not misinformed, but I just didn't know that a lot of rich people, they'll have these stocks and they'll just borrow money against the stocks and not actually sell their stocks, which is like, whoa. Okay. Have a residence there / business. Oh, okay. Because I just remember that it was like you're not allowed to own land there unless you're a citizen, and you can only be a citizen if you're a Muslim man. But I think that you're saying that you could still have stuff over there and not actually be a citizen. There's somehow those two things are not contradictory because you can freehold. Okay. So, okay, cool. Well, that's interesting. But, well, so answer me this. We got to get going soon, but how worth it is it having a business in Dubai? Oh, you can get citizenship by buying a house, and you can buy a house there? Really? I've always, you guys are talking about Dubai. That Dubai is just really interesting to me because I don't really know what goes on there. You know what I mean? Like I know that there's a lot of that, like they make money from oil in Dubai, but the city itself, it seems to me like they created the city with just the intention of it being a really rich and prosperous city. You know what I mean? That the city itself was designed to just be like this rich person paradise, and that there was like no actual reason for that specific place. You know what I mean? That's always kind of the feeling that I get when I think about Dubai. I've always thought too about Singapore because oh man, I remember you always used to be in the news all the time. I don't know why you don't hear about it in the news anymore, but they always talk about how strict they are in Singapore and stuff. But it sounds like there's good trading in Singapore, yeah? It sounds like if you want to day trade, that like Singapore is one of the places. Yeah, the money flows from Abu Dhabi. Yeah, exactly. The reason is UK and a US tax evasion. Well, there you go. There you have it. It's all tax evasion. Dubai don't have oil, just tourism. Yeah, exactly. That's the thing. Like when I say oil, I mean like they're able to build all of that stuff from oil, but they don't actually sell the oil there in Dubai. It's coming from, apparently, according to HF, from Abu Dhabi. But I don't know. I don't think very much about. Here's the thing: is that my wife is, in my opinion, not open. Like that personality trait. She's extremely agreeable, but she's not very open. So. At least not to the same degree that I am. I'm not saying that she's very, very not open, but like for instance, they're all picky eaters. Like she wouldn't say that she's a picky eater, and I mean she's okay, but she's kind of a picky eater too. Like it's a very common thing that we will go to a restaurant and she'll complain about the food. You know what I mean? So I don't see her really getting on board with moving somewhere other than Utah or Texas, or maybe where her family is in Tulsa, Oklahoma. Like if there was a trading job in Chicago or New York, right? Like they would have to be paying me there would have to be like millions of dollars potential earning there for me to convince her to do that. You know what I mean? Let alone like going to a different country. No way. You know what I mean? Anyways, but it's interesting to think about. Okay, so we're going to say market stages recovers after Friday. Recovers from weekend hangover. That's what we're going to call it. It's the 21st. It's time for me to get going. Guys, we had some good conversations. I had fun today. I was feeling tired, so I'm glad that we were able to have a good session. But I think part of that was because I was eventually able to catch a winner and I decided to let it run. And I never switched over to the more serious account, though. But otherwise, I'd probably be feeling really, really crappy, right? But you guys are all here. I had a lot of viewers today. Make sure you click that like button. But I will see you guys tomorrow. In the meantime, stay profitable, friends.